What about now? Use the other link. What about now? I just shared another link. Use the other link. What about now? I just shared another link. Use the other link. What about now? I just shared another link. Use the other link. What about now? I just shared another link. Okay, excellent. Okay, excellent. Okay, excellent. Okay, so now you guys can see me. Okay, so now you guys can see me. Oh, now so now see my screen. You guys can see me. Oh, now so now see my you guys can see me. Yes, the other one says that you said that it was offline. So this
Yes,
one
the
is
other
live.
one says that say that it was offline.
So this
Yes,
one
the
is
other
live.
one says that say that it was offline.
So this
Yes,
one
the
is
other
live.
one says that say that it was offline.
So this
Yes,
one
the
is
other
live.
one says that say that it was offline.
So this one is live. I just like to if some okay, could you increase your volume?
I just like to if some okay, could you increase your volume? I just like to if some okay, could you increase your volume? I just like to
Screen,
if some okay, could
Microsoft
you increase your volume? I just like to
screen,
if some okay, could
Microsoft
you increase your volume? I just like to
screen, Microsoft.
can barely hear me.
There's always something with these things.
Can barely hear me. There's always something with these things. Can barely hear me. There's always something with these things. Can barely hear me. There's always something with these things. Can barely hear me. There's always something with these things.
I don't know if I can make it any better, honestly.
I don't know if I can make it any better, honestly. I don't know if I can make it any better, honestly. I don't know if I can make it any better, honestly. I don't know if I can make it
I
any
got
better.
the volume 100% on.
I got the volume 100% on. I got the volume 100% on. I got the volume 100% on.
Can you guys, somebody, can you hear me any better now? Okay, I don't know what's going on. I mean, um, maybe I just put this thing a little closer, or maybe I just speak a little louder. Okay, I'll just gotta speak a little louder, I guess. I I apologize if it sounds like I'm yelling. Uh, but no, it's just that um 5 minutes, yeah. Uh, that okay. Today we're gonna have like I think it's gonna be probably like 5 to 7 second delay uh today. So that's normally the way that these things work. So I hope it goes without um I hope it goes without much interruptions like skipping and all of that. Yes, like it was yesterday. So we'll get through it. My focus is on obviously on today's trading. I might be I may put a trade here and there, but obviously that's not my primary focus today. Uh, so we'll get to it and see what comes out of today. Uh, Look, there's a lot of information that we have here, and we're gonna try to go through it, and I'm gonna try to be as brief as I possibly can be, uh, to be able to capture the majority of the information and share that with you. Um, Again, my primary focus is on developing or not developing, I'm sorry, providing this training as opposed as trading today. So we'll see how the days go. Um, so I know that I was trying to get something going for the NQ today. I do have some information. Um, I'm just gonna post it. I can't really I don't have enough time to type it. So I'm just gonna post the NQ pivot from 13080. So I'm gonna post this here in our premium chat. Um, okay, so this is the NQ pivot 13080, and you basically from 080. That's a 3-day balance slow there in that area. Uh, I'm sorry, yeah, 080. You look for the targets above. 124, 187, 218, and all the way up to 255. On the downside, 12,965. Um, that's probably what it's going to look like for the NQ today. Um, so I am going to, the market's going to open now, and um, we'll see what we got today. So you're gonna see this screen here. I'm gonna reset a couple of things. Um, okay, cool. Um, very good, very good, very good, very good. Pivot from 13080. I'm not gonna rush through going through this, but I am going to take my time and when once I start going through it, let's wait for the first 5 minutes of the market, and then I'm gonna start going through it. Uh, we'll talk about what we got in my screen and what you're seeing here, um, in comparison to what I'm going to be talking about. All right, so the market just opened. Normally, I just get, my um, my little lines here, and this is the opening price. You can see right here. We're close to weekly pivot, guys. So here's my footprint. Yes, I'm not recording just yet. So you can see here, the market just opened right here. 46.25. Open 46.25. All right, so I'm going back to the TPO. So this is overnight session right here. Once we get a yellow line, then I would reassess. Pivot is 54, which is right here. Disregard the left profile. Let me deactivate that so it looks a little cleaner. So we got a delta profile. Don't worry about that. I only want you to worry about the letters. That's what we're going to worry about, just the letters. After the first 5 minutes, then I just want to make sure that we're good first here, and you guys can hear me. And um, I'm going to tell you how much time of delay we got. We don't have a big delay, to be honest with you, or latency. Uh, I counted like it's about 5 seconds latency. So whatever you see in my screen is gonna be a 5 second delay. So here we are. I'm excited about today. So I hope I have. If you're here, can you just please? I know it's only 5 people watching, but I would like to know who the 5 people are, so I can specifically know um, who's listening. Okay, great, great, great. Yeah, so the second link, you guys, everybody's watching the second link. First one, let me just go ahead and and erase that. That link is not good. So let me get rid of this. Um, Second link is the one that works. Um, yeah, thank you, Steve. Thanks for listening. Uh, all right. Just in a few minutes, I will start the recording, but I want to wait until the yellow line is set before I go into the recording aspect of the training. You can see it's trying to push up a little bit. Um, yeah, that's fine. The session is going to be recorded, so I know there's a lot of people that cannot make it to the live training session, but by the way, we opened just above. Let me take a look at my algo and see what we got today while we wait. I can just do that information. Uh, 41, 48, 41, 14. 41, 48, SPX, and 41, 14. Algo is 4175 and 4141. Perfect, 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 perfect. We're good. Um, Good here. I'm gonna once I get all the stuff posted here, then we'll start 4175 and 4141. Not much different than yesterday. 4141 weekly pivot and 4175. This is slightly under. Okay. All right. Yellow line, I got it at 4148.25. See how we got almost a pivot and we got a rejection there, which is basically VWAP. Like I say, not focusing on trading today. From my perspective, um, obviously you can, but I'm not probably gonna be able to do any quality trading um, doing this. So let's look at the footprint here. You can see there's a big imbalance here. Here's pivot. We'll talk about that in a few minutes. All right, you guys, can you please let me know if everything if everything is okay, I will go ahead and start the recording so we can start talking about um, this thing. So you can confirm either here or YouTube, or you can do it on Discord. Doesn't matter. Um, so NQ got to to the pivot, I post the 80, right? And you okay? So here it is. It's right there. It's running into that imbalance here. Um, so that's the challenge right now. But 080 is key to stay above it. I'm gonna move this guy here to 080 and see where the IB closes. If everybody's good to go, I'm gonna hit the recording and then we get going. All right, I know a lot of people are excited. So yesterday we talked about one-time framing, and I hope everybody understands what we talked about yesterday because it's the foundation for what we're going to talk about today. Okay. All right, let me hit recording. Okay. All right. Good morning, guys. We're here to deliver the introduction to market profile uh, trading, and we're just gonna talk about the market profile and how the market organizes the information um, for the auction process, because that's what it is. It's just an auction process. There are a lot of elements that come into play when we talk about market profile, and a lot of people get intimidated by um, the all the letters and sometimes the colors and things like that um, and they don't want to learn because it seems complicated, but it isn't. You know, this is nothing more than giving you a stack of books and just ask you to go ahead and organize it. And you go and you organize the books in a way that you can find it when you need it because it's information that is important to you. There are so many complexities to the market profile that we're not going to cover today, but we are going to talk about the basics and the fundamentals of market profile. All right, so let's see what we got here. So everything that you see from this point to the left is all overnight session, yesterday's RTH session, and so forth. What I'm gonna do is I am going to um, I am going to delete all the drawings that you see here, uh, and we're going to perhaps do them again in the live trading environment. The platform that I use is Quant Tower. I like it because it's fast. It's fast uh, and that is very important to me. So the market profile basically it gets analyzed by using RTH data. Normally, the ETH session is irrelevant to the market profile concepts, but it can provide you with some good information that you can use to apply it to your analysis. So the market profile is a graphical display of the auction market process based on market generated information. The structure reflects participants' opinions during the auction process, and price is visually represented on a vertical scale, while time is visually represented on a horizontal scale. The completed profiles shows what happened, when it happened, and who was involved. So let's talk about the market profile here. So as you can see, and we're going to take today's as an example, in this particular screen, the opening price gets recorded, and you can see this white little line here. This is the opening price, 4146.25. And it starts printing with the letter A. So you can see all the letters printing here, A. So we are trading above the opening price. Okay. So normally, um, what we have to do is we have to wait for the market to generate information for us, and that is all it is. Um, I use a combination of market profile, which is the letters you see here, and the volume profile, which is the graph that you see here. So this is the volume. Uh, I use this a lot for my day plans and weekly plans because it's really important to understand where the majority of participants decided to establish or exit a position in the market. So let's take a look at the information that was generated from yesterday's session. All right, so if we go to yesterday's session, which is this portion here, this profile here, this is yesterday's session right here. Um, I am going to highlight yesterday's session right here. Okay. And what I'm going to do is I am going to change the color so we don't have a fill in here. Or maybe a little less. Let's do a 10% fill. Okay, so this is yesterday's session highlighted in here so you can see. Disregard this here because this is the ETH. But we're going to talk about the importance of the ETH, which is the overnight session, so you guys can understand, what kind of information you can get uh, from the overnight session. Okay, so every single period here is 30 minutes, and you hear me talking about the 30-minute chart a lot because it's a 30-minute uh, profile. So all these letters, so the A is going to print for 30 minutes. Then B is going to print for 30 minutes. Then C is going to print for 30 minutes and so forth. So everything prints in 30 minutes. So you're not going to see B until 10 o'clock, which is when my opening range levels will be set. Those are what I use. Uh, I use a 30-minute range. Um, so from yesterday's session, and we're going to discuss this in detail. So we have a session yesterday that was a trend day, which was great because we discussed the one-time framing in detail. So you can see yesterday's session open over here, and when the A period came down, it came down about 2 ticks and it hit the overnight POC, which was this yellow box over here. From there, it bounced. So the yellow zone here is a volume profile POC, and the white line here was the TPO POC. What you see here is called the TPO, time price opportunity. So the information that was generated from yesterday's session is really important for today's um, auction and for our day and for our analysis and everything else in between. So yesterday, as you can see in here, we have what we call a single print. So a single print is nothing more than one single letter. You don't see any other letters overlapping the B here. So single prints, including tails are at the end or over here. So those are tails. Um, so single prints are frequently seen at the top and the bottom of the profile. Um, they form by price moving quickly away and require at least two TPOs to be confirmed. Why two TPOs to be confirmed? Because obviously, when you have the B period, then the C period starts, and if it doesn't trade into the B area, so that becomes a single print. So that is a single print in here. So it's just exactly what it is. I'm not going to complicate it more than what I should. It is a single letter. So we're going to mark that single letter here, and we're going to extend that out to the right. So this is today's session. As you can see, I'm taking that over from RTH and moving it in here into the through the ETH session. Now you can see here in the ETH session, the moment we traded below that single print, the market dropped significantly. Uh, it dropped about, let's take a look at it in ticks here. I think it gives me ticks. Now look at what's happening. At 54, that's crazy. So it moved 85 ticks, which is about 20 points, a little less than 20 points. 20 points would be, um, 20 points would be 80 ticks, so a little more than 20, 21 points. Let's just say 21 points. So the moment the price traded below that, because going up it will support, coming down, once you cut through it, it becomes a resistance point now. So we got the single print area over here. Again, single print is nothing more than just a single letter. There's different ways to visualize the profile. Um, you can split the profile if you want. A lot of companies or a lot of platforms let you split it. And what I did was I split every single minute or every single period. You see the A period here, B period here, C period here, D period, E period. This is just nothing more that if you were looking at a 30-minute candle. Uh, so if I bring a candle here in 30 minutes, you will see that this is a 30-minute candle. That's all it is. 30-minute candles. That's why I love this platform. So you can split it and look at that. The moment you were one time framing up, which we discussed yesterday. We're gonna touch bases on that today. But the POC, obviously, from the ETH session was a 41.77, and we're gonna bring here, you know, today's plan, and I explained it a little bit in the 9-minute video that I made this morning. But you will see where the information comes to create our plans. So I'm gonna undo the splitting in the profile, and we're gonna focus on what we got here. So we identify a single print here. I hope everybody understands what a single print. Single prints are also buying tails and selling tails. For example, in here we opened here, and you see how we sold off. So that left a selling tail in there. The opposite, it will happen at the bottom when we have um, a buying tail. You will see just single letters in the bottom, and that creates a buying tail. Single letters on the top creates a selling tail. So here we got to 58, and it's just rejected. All right, so we address a single print. So we're gonna wait for the first 30 minutes to establish what is called the opening range. And once we get the opening range, then we talk about all the things. All right, so in the profile, you're gonna see what is called the value area. Value area is where 68 or 70% of the time, 70% of the time in the TPO chart, where the market spend 70% of the time, or 68%, whatever you decide that your setting is. So I like 70. I keep it at 70. So that is the value area, uh, 70% of the time. All right. So the value area, um, obviously has a midpoint and everything, but the value area represents the first standard deviation of a completed session, or approximately 68% of the trading activity, beginning from the point of control, POC, to the mean. It develops as the day progresses through each half an hour TPO period. Um, The second and the third standard deviation contains a 95 to 99% respectively of the day or the trading volume. Value area relationship from day to day describes as a higher, lower, overlapping, overlapping higher, overlapping lower, and inside. The value area relationship can help traders establishing their conviction into which direction the market is going. So in here, in this chart that you see here, and we're using yesterday's as a reference, guys. Um, so according to the TPO, not the volume profile, okay, we have um, our value area high here, where this blue line is. That's how it marks in my chart. So so I like to normally I just write PD value area high for previous day. Then I'm gonna duplicate that, and I'm just gonna find PD value area low. And the value area low, according to TPO, it was right over here at 68. So I'm gonna go to 68 and I'm gonna do my line 68 right here. So every platform does it differently. I'm teaching you this, and if you are a customer or a client from AMP, you can get this platform for free. So I'm going to eliminate the right profile for now, so we can clean this out a little bit. So we have a previous day value area high, previous day value area low. And the other thing I like to do is I like to find my POC, which is right here. Base it on TPO. We're only discussing TPO today, okay? That's how this all these markings come into play for me. Previous day, uh, TPO, POC. So we got some good information here. Um, so that establishes from here to here, the market spent 70%, according to my settings, the market spent 70% of the time trading uh, from here to here. That was 70% of the time. Oh, my kids picked the wrong day to start crying. So that's where majority of the time was spent yesterday. Um, so you can also see in here that we have what we call the halfback. The halfback is nothing more than the 50% of the range. So it is half of the range. It's exactly what it means, halfback. So 50% of the range is there. All right, let's look at our information here and look at that. We rejected overnight halfback in red here. This is a single print from overnight. I told you that sometimes overnight generates information that it's not necessarily um, in, super important, but there are clues that can validate your analysis for the ETH or for the regular session. And then we're going to talk about distributions. So those are two overnight single print zones. Okay, it overlaps with yesterday's single print in here. I hope everybody's follows me by now. Um, if you're not following, uh, you know, please just write something and let me know if you're not following, okay? But I hope everybody does. So just to recap real quick, each letter is a 30-minute period. Um, you're gonna start seeing the B letter printing very as soon as 4 minutes. And for me, that would establish uh, what I call the opening range for 30 minutes. Now, in this platform, I have it set up differently. I think I have set up about an hour of trading to be my initial balance high and my initial balance low. So we're going to talk about the initial balance now that I mention it. So the initial balance um, is nothing more than a representation of the first two periods, A and B. Okay, so A and B, first two periods, and that is the initial balance. Simple as that. That just basically tells you, um, you know, where the market is, and it also give you a projection uh, where the market is potentially going. So a breakout of balance, then you make your own decisions there. But that's basically the way you want to look at it. Staying focused on a balance, which is the first two letters. And then you're gonna see how this platform marks it. In this particular case here, um, it has a different setup. So I would tell you exactly what the setup is for the initial balance. Let me take a look at it in here, and I think I have a way to see the settings. Um, see what we got for initial balance. Initial balance, I have it as set up as 30 minutes. So you will see in 2 minutes where the initial balance is. All right, so you got two sets of prints, and we were talking about the initial balance, which is nothing more again than the first hour of officially the first hour of trading. Uh, some people like 15 minutes. Some people may do, um, 30 minutes like I do. There's people that even do 5 minutes. All right, so um, let's just see how the market is generating information for us, and see what it does here once it start printing the next period, so I can cover some of the details. But going back to yesterday's session, we one time frame up almost the entire day. This is where we close here. The O period is yesterday's closing, which is the next arrow here. You get an arrow here opening, you get an arrow here at close, which is near the POC of the TPO. So we're gonna take a look and see what all the info. Okay, so B period started. Uh, so we get the B period here, and it starts to print right away. So we'll see what the B period does. Um, oh, NQ is in a different market than the ES, from what I can see. That's impressive. Uh, well, we'll let the market, give us some information. But if you take a look at the plan that I posted, it hit the first target from the pivot that I gave you from 80. Uh, it hit the 124, which is the previous day value area low. Um, so we'll see what it does here. All right, going back to our information here, you can see how the B period opened, and as it prints, it's generating more data for us. Uh, you can see that they didn't even go to 54. If you go into the footprint, and this is where we get the N30 information, you can see that it didn't even hit the N30. So, um, which is right there where the pivot is, and you see that the delta is negative. So there's a lot of selling going on in the market today. But we're not talking footprint today, but we're gonna mirror that. We're gonna marry that information up uh, later on as we continue our session today. So, all right, let's see what else we got here. Let me make sure that I'm not missing anything here. All right, so you can see how the opening price is here. ES is trading below the yellow line right now. Yellow line is at 50% of the first 5 minutes of trading For those that don't know what the yellow line is, and the blue line is just nothing more than the opening price. Uh, so that's all it is. There is really no much to it. It's just that. Um, so we'll let the A and B period work itself out. I know it's gonna be like about an hour until it's done, and we'll make some decisions. But you can see how the B period uh almost got to the opening price. It didn't get to the opening, and it's bouncing from there. So we'll see where it goes. The first attempt at pivot failed, uh, and it got into the single print zone here. This is what it takes to do it in live market. Sometimes you have to be able to stop and watch, I guess. Okay, so we cover a couple of things here. So for yesterday's session, so here's a single print zone once again, half back, and all of that. So I'm gonna bring in yesterday's plan, or I'm gonna bring in today's plan so you can see where the information come from for um, our plan, and how important it is to validate uh, what you see compared to what the market is doing. So let's create basically our plan here, and I'm gonna use the same lines that you see here. So first line, 63 is the first target above pivot, 63. T1, I just put UT1, 80, UT2, and 94, UT3. On the downside, we said there was 40, which is weekly pivot. DT1, we got 30. I'm not going to go into the details as of why. DT2, I already posted that in the plan. And 11, so DT3. All right. we got the targets in there. Let's figure out what we got, and why those targets. All right. So as you can see, we cover single prints. We cover one time framing, which is basically making a higher high in 30 minutes. In order to break the one time framing, you need two periods breaking either above or below. depending on the type of framing that we have. Um, Now we're going to talk about the point of control. Point of control is, or POC, is where the most volume happened. If you look in a volume profile, is where the most time was spent. If you're looking at TPO, that's basically what the point of control is. Um, you know, Point of controls will move throughout the day depending on the activity. Obviously, if we were to go lower, then you'll see point of control will probably gravitate a little lower. Um, if it will go higher, then point of control would likely to go a little higher. So it really depends, um, where we at and how the market is processing the information that is being presented. Um, Now, if you take a look at the ES, it's still trading inside the first 30 minutes. So it hasn't decided where to go just yet. It is trading above pivot, which is really, really good that it is trading above pivot. So we'll see what happened. The NQ is trading above the pivot that I gave you. I think it's about 60 points above the pivot that I gave you this morning. Um, so we'll see where the day takes the indices, but I want to show you something really cool that is happening in the live market right now. So you can use that as your piece of information to just to support the training that we're doing today. So very quickly, I'm going to shift over to NQ, and I want you to see what's happening in the NQ. Uh, so I want to change this here and we want to put in the date because it's likely to happen in the ES as well. But we're going to get a head start and do it in the NQ. When it happens in the ES, then I'll show you what I was talking about. So you can see the A period here in the NQ. Now you can see how the B period traded above the A period. Okay, where is the NQ going? Um, there's a set of singles right here, the same set of singles that you have in the ES of the same position that you have in the ES is right here in the NQ. So it broke above the A period. Now, when you go back to the ES, you can see that it hasn't broken above the A period, but it is above pivot, which is great. Um, so NQ is doing what I call a breakout of the opening range. That's what the NQ is doing, breakout of the opening range. Um, how do I know that? Because it's trading above the A period. That's just plain and simple. That's all the information that you need to obtain to know if it's breaking out of the first 30 minutes. And now that brings me to the next topic, which is how to identify the poor highs and the poor lows. It's very different from a double top and a double bottom. Similar, but not the same. A double top and double bottom can happen on any two candles. You pick two given candles, and whatever those two candles are, that's basically um, fixing the double top or double bottom. It doesn't matter. But when it comes to market profile, double tops and double bottoms, uh, they have to happen in terms of two periods, kind of like being at the same spot together. And a double top and a double bottom does not have any excess. Uh, or if it does, two ticks is basically what the standard is to determine whether you have a poor high or you have a poor low. And that's basically what you have to keep in mind. That it's really important to understand those concepts because Um, when it comes to poor highs and poor lows, those are very emotional areas in which the market is likely to come back and revisit. As you can see in yesterday's session, we left here uh, a poor low. And how do I know that? Well, if I look at the low, let's go back to yesterday's profile, the A and the B period, and we're going to take a look at yesterday's uh, A and B period, which is 9:30. There's two candles here, 9:30 and the 10 o'clock. The low here was 57.75, and the low here was 58.25, exactly two ticks. So that is basically considered poor low because it has to be, you have to have more than two ticks of excess to determine that you don't have a poor low. Um, and like I say, it's just emotional levels that people tend to act. On that because they're waiting for that price to hit, and it's a level that is very important, and they're waiting for that price, and once that price hits, people take action. It just happened that yesterday uh, we opened at 58, so when you expand this out, you can see here that this was the opening price here, so people were buying the opening, so that was the emotional level, the opening, and that's where participants decided um, to initiate their trades. All right, let's go back to our TPO and the ES. Now you can see the breakout of the A period. Now we're getting into the singles area here, and this is very important to understand that now um, we've just filled this overnight single print area. Again, not necessarily what we go by in market profile trading, but it's very important information that we need to keep in mind. So, because what it does is the single prints is basically create what is called distribution zones. And a distribution zone is, if you take a look at the overnight profile, this is a distribution here, and that separates, single print separates the next distribution. So if we were to trade above this, then brings the next distribution into the picture. Hope everybody understands. The distribution normally gets separated by singles. Um, so these are single print that separated the overnight session into two separate sessions or distribution zones. I don't like to call it sessions, so just call them distribution zones. So this poor low has been corrected because the market opened below it. Now, did we open on a gap down? That's always a question, right? It's always a question whether we open a gap down or a gap up. Well, it's very simple to understand. If you look at yesterday's low here, right? This was yesterday's low, and if we opened here, this is a gap. So we open in a gap. This is a gap zone. As you can see, right now, the ES is doing a gap fill. This is a gap fill. And stronger sellers will have prevented the gap from being filled. So if I send you, or if I post an illustration, uh, let's just do this. Let's do, let me see if I have a 30-minute chart here. Well, I have this, I believe I have a chart to show you. If not, I'll create one. Um, so let's take a look at this uh, chart here, and I'm gonna talk to you about, obviously, I'm gonna close it later on. and we're gonna just do 30-minute candles. 30-minute candles, and I'm gonna hide all the indicators. Because I don't want you to be intimidated by anything, okay? So don't get intimidated by the letters. You can see it here in candles. Don't want anybody getting intimidated about what goes on in the market. So now you can see here that yesterday's low. What time was this low here? 2 o'clock. 2 o'clock on 417. Yesterday was 419. So we're gonna go with 419. RTH low was right here. That fills the gap. Okay, this is a gap fill. That's why you're seeing a reaction here. Okay, so I'm gonna put this chart away because this is the same thing that I was showing you in the profile with the letters. Uh, it's just that you're seeing candlesticks now. Minimize this. I'll bring it back up later. Actually, I'm gonna put it at the end there. All right, let's go back to our TPO. So this first set of singles here from overnight got filled. The gap has been filled because this was yesterday's low. So now is when the fight really begins. Really begins right now. All right, let's talk about the next topic. Um, can you find setups to trade? Um, oh, actually, no, I'm sorry. Let's talk about the one-time framing. That's the next part of the process. So here we are one-time framing now, right? Because this one made a new high. So this is one-time framing. Made a new high, did not make a new low. So now we're identifying the one-time framing concept here as we follow along today. Right now, the point of control, like I said before, for the TPO is right here at 52. For the volume profile, it's a 53 and a half, and the half back is a 52. So just keep those numbers in mind, okay? Where is the 70% of the trading happening? Between 48.75 and 57.75. So I'm going to move this singles to the left because these singles have been filled. So this is a non-factor for me. Uh, so I'm just gonna change it to that and not a factor anymore because we're trading right over here. The most important one for me is a single printer from 64, which is our T1 right here, 63. And how do we come along with 63? Well, I will tell you. Well, number one is it's a single print zone here, 63 to 65. But then you take a look at what I've been posting, uh, and I've been posting a couple of things. Number one, if you pay attention, 63 was the breakout of balance. So the ES was one time framing up until yesterday. One time framing up on the daily chart was broken. Um, it was broken yesterday because we made a new low. This is the session before, right here. Let me identify the session before. right there. Right. So we made a new low yesterday. Therefore, we broke the one time framing. That makes sense? I hope it does. This broke the one time framing. And this really made it a lot tricky for me yesterday because we're breaking the one time framing on the daily chart. Uh, I was suspecting, that we were going to, um, probably sell yesterday, but we didn't, obviously. So right now, this is the little drawing that I made in the other chart. So this is basically gap fill, and we just fill the gap. That's what we did. Okay. So now, basically, okay. So where do we go? So technically speaking, when you get your initial balance, the market has a tendency to target 50% and 100% extension of balance. So if you take a look at the range that we're about to establish in the next 7 minutes, we're gonna determine, you know, where can the market potentially go today, um, and then we're gonna do that in the next 7 minutes. But we also want to identify trading opportunities. Trading opportunities for somebody who's looking to go short today. It was obviously waiting on onto the gap zone and potentially at the gap establish a short position because we are on a gap down. So if we close here yesterday and we open here, we are on a gap down. The gap has been filled and you're getting a reaction. Once again, stronger sellers will have probably prevented the gap from getting filled. I just want do a quick check, guys. Can you please type in the chat box if everything is going okay? If you can hear me and you're seeing my screen. I know I'm recording it, but I want to make sure that everything is working as designed. Okay, thanks, Michelle. All right, just needed one person. That's cool. All right, pretty good. So, so that was the first trading setup right there. It was if you're looking to short, you're using the gap fill. Uh, it just happens that we got some targets, and you know you could have taken it long at the opening, and your target would have been the gap fill. You could have done that as well. You can also wait for a retest of pivot, and you can take a long trade, but your stop needs to cover at least uh, the POC. I would say at least the POC. If you want to take a long trade targeting 63. Okay, so let's keep going here and see what happens. Let me send some information here. Someone is asking me for the link, so let me send the link. Uh, I got all the notifications. All right, so see the response here. Okay, now if the NQ is more advanced, let's take a look at it. See the NQ is establishing, it just filled those single prints that were right there from the RTH session, which is what really matters. It flew through this ones here. So this ones were not even a factor. The big delta level, you hear me saying that before, is 85. So very important level for the NQ today, 85. This is where the majority of the selling, took place. If we're below it, I'm assuming that it was selling. If we're above it, then it was buying. All right, let's go back to our TPO here in the ES. Now, once the next 3 minutes are over, then we're going to talk about range extension, um, and figure out what we can do with the range extension. Then the next topic will be talking about, um, how to identify, um, you know, how to identify the type of day that we're having based it on the profile shape. All right. So if the range doesn't change, let's assume that it's not going to change. What I do is to identify the range extension because this platform doesn't do it for me automatically. I know Tradovate does it. So here's the range that we're having right here. Okay, this is the range that the ES has established for the first hour. Now the range is extension is potential targets. So if I go over here and I put this on top of the B, the 50% of the range extension is right here. So I'm going to put just a mark in there. 50% of the range extension is that. 100% of the range extension, it would be this. I'll do the same thing for this downside. This is good. I like doing manual work because it's just sometimes it's even better because you put your hands on things and you learn a little better. 50% here, 100% range extension right here. And we do the same thing for when we are um, doing a balance for a week, balance for a day, balance for intraday. It's always going to be the range. So here's the range extension that we got. We can potentially see that this can be a target. This could be a target. This could be a target. This could be a target. So those are very important concepts uh, to understand in terms of finding trading opportunities. So now we're seeing here the C period just started, and this is when it gets really cool. All right, so I don't need to expand the profile, or maybe I will. See, I just expanded it. So what I did was I separated A, B, and C. So as you can see, C period is here. We're one time framing up, okay? And we'll see what happens on if C makes a new high, as long as B is not broken, you're still one time framing up. So let's take a look at the NQ. I'm going to split this one up. The gap was filled right here at the NQ really early. Not even a factor, it was only a 30 points, 35 points gap. Well, that's pretty significant if you ask me. 30 points. Okay, so we'll see if we make a new high above the B period. So these singles are done. Single print, again, once again, to recap, it's just had one single letter. Okay. Then the cool thing is I'm going to show you how these things look in a candlestick chart. So now we're dealing with this one here that overlaps the overnight single print zone. Okay, good. All right, so we'll see what happens. Like I said, you got some targets here, value area low from the previous day. Close to previous day POC and the high of the overnight session. There's no accident in these things. There's nothing that's confidential about uh, the way the profile is being developed and the way that the market makers deliver pricing. So uh, there really isn't any just accidentally this accidentally showed up here. I don't think it's anything that's is an accident. Everything has a reason. Um, I will just keep watching here, and we'll take a look at what happens next. All right, so sometimes let's talk about the different profiles. So you have, sorry, see what we got here. So talked about the range extension. All right, so when you get short covering, the profile normally would print something similar to a P, to a letter P. So it would be skinny in the bottom. Let me get the pen. Thanks to my friend John Torres for helping me. This is what you would get normally. So a P-shaped profile. So starts from the bottom, it runs up because obviously shorts are covering from their position, and value moves up, and it just basically trades on the higher portion for the rest of the day. So that established a short covering right there. This double distribution you're gonna have in double distribution profiles is basically a perfect example is right here. This is a double distribution separated by a single print. You could say you had a little bit of triple, but now let's just call it a double distribution here. This is a double distribution in shape of a B. So that's your double distribution. Now ES, I don't want to miss this because I we talked about one-time framing yesterday. I'm gonna highlight it today. Here's a one-time framing. I'm putting an arrow every time that we do a one-time framing, so we can focus on that. But all right. So far so good. Okay, so we got into the single. No, we didn't get into the single print zone. We did get into the half of this one, not so much into that one. So now watch out for 63. And 63 is a zone once again. Um, and not necessarily a 5 point zone, but I like to look at it that way because if you enter at the number, you only have to cover 2 3 points above it. Uh, if we enter at the low end, then you need to cover all 5 points if you were taking it short. But the fact that sellers um, allow the gap to fill, that tells me that buyers are being basically the aggressors today. And we can validate this to see what's happening in the footprint for the last 30 minutes. And for that, we go to our footprint and take a look at it and see what's going on. So as you can see, we started the day here with a negative cumulative delta of almost 8,000 contracts. As this candle printed, it went down to 5,100. And as this candle is printing now, it's at 3,100. So the delta is correcting itself because the market participants are very aggressive on the buying side. So we'll see what happens once we get close to this zone here. Um, and the reasons why this zone is important again is because it is the high of the previous 7 day balance zone. So trading above that, it will basically bring a lot of these other things into play. Most importantly, the halfback of that previous balance zone. Go back to our TPO, take a look over here and see where we at. The high of this candle was 61.75. Now, if you Obviously, looking for trading opportunities, as we always talked about. Obviously, T1 is a short opportunity, 63. That's why it's there. That is the reasons why it's a target because of this particular single print that got generated after 63 was identified. But 63 has been there since last week. Just happens the market has memory. And there's no coincidence why the single print was put in there because obviously buyers yesterday wanted to trade above that 7-day balance zone. That's why price just kept going up and up. And once the sellers realized that they got an opportunity to get it down below 63, look at what happened. I told you, 20 points. Now the trend still is down, uh, just because the one-time framing is down. In order to break the one-time framing, we need to trade above. Well, to get out of balance, we need to trade above 94 because that's the balance zone now. The high from here created the balance 94. That's why it's a target number one, uh, right up here. Target number one for I have it as a UT1, but it should be UT3, not one. Let me fix this here. So if you thought that this was something magical, I hope you're learning something. But if you thought it was something magical, it really isn't. It's just that you have to understand the concepts and stick to it. So we're still one time framing up until here. So if it gets back to this arrow and it breaks it, then it's one time framing down. Or we get back into a balance. And the NQ is 107 is the important point, 107. All right, so let's move on and talk about we talked about the short covering, we talked about the double distribution, and now we're going to talk about the long liquidation, which is basically the opposite. It's a beat-shaped profile. It starts on the top and builds value on the bottom of that area. That is a long liquidation, or you can say you get short covering and then you get long liquidation, which is creates this type of profile. The long liquidation can be found in here. See if I can find um, one here so you can look at the long liquidation. I think it's one here. This is a long liquidation profile. See what I was saying? Started here with the A period. First letter is A, and then it's just basically from there, it just value stays right here. So loans were liquidated from 94 to 83, and then the market spent the rest of the day down here. That was that was actually an RTH profile, so very much valid. Market opened over here and it closed over here. So it's just basically value gravitated down and it stayed down. Any questions, please type it in the box so I can see if anybody has any questions. I can focus a little bit more on that. No questions. Okay. So we talked about, just to recap, initial balance, the first 30 minutes, A and B. So if I were to change If I were to change this initial balance here to 60, you will see how the color of these two letters will change, A and B. So that is the initial balance. That's how we measure the extensions. Um, and this is all market generated information. This is great because it's generated by the market. There's no emotional factor in there. It's just what the market is giving us. Um, POC of the volume profile right here, 57. POC of the TPO, 55.75. Pivot is 54. All right. Again, stronger sellers will have prevented uh, this gap and this gap, not this gap here from being filled. Um, sometimes it overshoots. So we talk about overshooting a level. Overshooting a level, it could be as big as 7 points. So let's just take a look and see, how 7 points will look like uh, in a situation like this. So overshooting the gap by 7 points. Let me make sure my two ticks here. I use a two tick aggregation. So overshooting a level by 7 points, it's 28 ticks. We'll basically be filling that single print zone in there. That's where my 7 point stop comes from. Sometimes, you know, you overshoot a level by 7 points. So if you get on top of the level, let's just say we got 63 here, 63, 2.5 points above 60, 65 and a half, 2.5 points below is 60 and a half. So if you were to take a trade in the center of that level, 7 points is considered the overshot. So you're using 7 points stop loss. In this case, from 63 to 70 would be your stop loss. And it will cover 50% extension of the opening range, previous day value area low, and everything. So you get 7 points here for stop. If it's going long, it will be the opposite. But identifying the type of days that we're having is also part of the market profile. So let's talk about the type of days that we're having. So opening drive has a tendency to produce one-time framing market movement, which is what you're seeing today. There's a potential for reversal as the periods unfolds. So what the market would do in opening test drive, uh, it goes to a key level, and that is exactly what it does. It goes on a key level before the other time frame traders reverse the market activity. Other time frame traders are institutional traders. They also have the tendency to exhibit early continuation and range extension, as well as increased potential for reversal during the first half of the session. So exactly what I was saying. The the opening drive, as you can see here, is a establishing a one-time framing up. If the market is going to reverse, it is our job to figure out where is the market likely to reverse. As traders, that's where you get targets. The market is likely to reverse at this single print here. The market is likely to reverse, let's see, single print from 63 to 67. 67 is a 50% extension of the initial balance. The market is likely to reverse at the overnight high. It just happened that that is the TPO POC from the previous day, which covers the 100% extension from the initial balance. So 50% comes into play, 100% comes into play. Those are zones in which you can look for an opportunity of a reversal. Now, here's the trick with reversals. The way I want to teach you guys to look for reversals is to wait until one time framing is broken. And yesterday was a perfect example of that. One time framing never broke yesterday until until see this period here, 3:30 p.m. That's when the one time framing was broken yesterday. 3:30 p.m. Okay? And look at what the market did after it broke the one time framing. It started framing down. And I traded that the day before, didn't trade it last night, but you can see what it did. It came back exactly, actually, it cut the day before because it was 50. It made a new low, 43. Um, you can only imagine what I did at 43. I don't remember the time that when I was awake, but you can only imagine what I did at 43. And if you know me, you know what I did at 43. So I'm gonna split this and I'm gonna show you in a candlestick chart how it looks like. This is the candle that broke the one-time framing yesterday, 3:30 p.m. Right? Now in the footprint, let's take a look at it and see how that candle looks like. 3:30 p.m. yesterday. This is the candle that broke 3:30 p.m. You see it right here? This candle closed right here, 78.50. This candle open, this candle open at 78.50. The moment this candle traded below the POC of that candle, this was a short opportunity. In fact, we already had a level. Um, we already had a level there yesterday, which was T1 right here. So this candle closed at 78. You could have taken a short at candle opening because had already broken the one time framing. And in fact, I took that short. I got out of market close, which was nothing because it just got down to like 72. But look at what happened overnight. One time framing down from RTH session. It just danced around a little bit, a little bit, a little bit. And then guess what? The European session opens. I don't trade the Asian session. Sometimes I will get up at 3 o'clock and do the European session. Sometimes you apply the same concept. This is your blue line in the European session. This is your stop right above this candle. Look at that. Started one time framing down, one time framing down, one time framing down. It broke the one time framing right here. Just started consolidating in there, broke the one time framing, resumed the one time framing, or back into balance, inside candle. This is when we open here. So it's really hard to gauge the one time framing during the overnight session because you get a lot of fluctuations up and down. But the market respected the levels. 4040 was pivot, and for if you do a zone, that is exactly what it is. I was hoping that it would get here to 39 because it's a naked 30, um, and then 30 right here. So something is shifting in the market. You can see that we started with 7,900 contracts. Now we're only down to 1,000 contracts in the red. You can see how we're breaking out of that zone. And here's what 63 is right here. So let's go back to our TPO. We're about to fill the single print from yesterday. So selling activity is expected to happen in there. Uh, what do you guys think I did at the low that I identify? If you type it on Discord, I cannot read it. If you type it in YouTube, I can read it. But anyways, I'll tell you what I did. Uh, I took a loan. Correct. Correct. I took a loan. Exactly what I did. Um, it's part of plan. That's where we at. So look, we've been at it for like an hour and a half. I'd share with you uh, the initial balance formation. I share with you um, value area high, value area low, POC. You apply the same concept to a daily chart, to a weekly chart, to a monthly chart. It's the same thing. It's just it's just probably spells differently. Monthly, weekly, daily. But it is the same, essentially the same exact thing. Um, Now we're looking for range extension, okay? 67, 74. We're trading at 60 right now. He tried to get into this single print zone. We'll see what happens. We'll see what happens. Did it hit 63? Yes. Stu probably took a short there at 63. Oh, you can just wait the next 6 minutes. Or you can wait until one time framing is broken. There's a lot of things that you can do. And the one time framing, you can also apply it to a 5 minute candle, like I discussed yesterday. It's applicable to even a 5 minute candle. So, in fact, um, as we get close to this area here, uh, target, we got a red dot in 5 minutes. Uh, So we're gonna go to this area here in 5 minutes in the footprint, and I'm gonna show you in 5 minutes how it looks. So see how 63 rejected right there? This candle just opened. The dot was formed right here. So the dot just came out, and this is the sell zone. Where is the best spots to take a position if you were going to take a short? It would be 61.75. The POC of the 5 minute candle. Um, As you can see, the 5 minute candle was one time framing up. It just broke the one time framing. So we'll see what this candle is going to do because it's the same concepts, guys. It's the same exact thing. Same exact thing anywhere you look at it. 5 minutes, 2 minutes, 3 minutes, it doesn't matter. Remember, the range extension target is 67. My target is this single print. And the single print, that's where we at right now, 63. It just touched the lower zone of that single print. Let's go back to the 5 minutes, which is my entry chart. That's why I call it entry chart. And we're going to take a look at the NQ and see if it filled those singles that we're monitoring in the ES. And here's the singles for the NQ uh, right here. Fill the singles, trade above it, and it still is one time framing up. So let's go back to our ES. Um, if you follow the NQ plan that I posted, your target one is hit, which was basically the single prints. So the NQ went up from 80. That was basically my pivot 80 target one. was 135, 125 zone. In NQ, you have to operate in zones because the range is so big. All right, so guys, any questions, anything? Because I want to stop the recording to uh, keep the session short for training purposes, and then we can stay streaming. I can either stay here, record the rest of the session, or I can go to Discord. It's up to you. But um, I want to uh, I want to split it up and see if I can just have one session for training purposes, and the rest of the stuff we just continue doing our own streaming like we normally do. Either you guys understand, or either I confuse the hell out of you because I don't see any feedback at all. Gotcha. Yeah, so I'm gonna share a link with you guys, which is not basically what I use. Uh, okay, yeah, we can do that. We can go. Um, we can go to Discord and connect on voice and just keep this thing here. Um, but look, there's a lot more to it. I just want to give you an introduction to it. There's a there's a lot more to it. I just want to introduce again the concept of uh, initial balance, which we talked about. There's two purple candles here, 60 minutes of trading. That's your initial balance. I just wanted to talk about, the type of profiles that we get, the long liquidation, the short covering, so you can identify B shape, P shape, and the double distribution profiles, which we have all those examples here, which I talked about. We just got a new period printing. Uh, and you can see here that it's one time framing up. Let's see if it gets into that one time framing up area. If it's not, this is what Stu will call a short uh, risk, or a, a low risk short, he will call this, because you only have to cover the top of that portion here. So there is no rush to get into a trade because we're one time framing up. You should be getting or scaling out here at 63, which is your target. And if you took along a pivot, this is your target. I'm going to continue to ride my position. So now you see how the market made a what you would call a double top, and we'll call it a poor high, basically right here, poor high. So now we're going to see what's going to happen, because like I said before, uh, the market can easily become rotational once it gets to a level in which market participants from the short side decide to take action. And we identified that level when we talked about single prints right here. So we talked about single prints, and also I gave you the target of 63, which was the all 7-day balance zone high. So a rejection in here is because sellers do not want the instrument, whether the ES or the NQ, whatever the case may be, to get back into the balance zone. Because getting back into the balance zone will automatically you can automatically identify as target the half back of that zone followed by the high of that particular zone. So we'll see right here. Obviously double top, um, poor high. Sometimes it gets corrected right away. Sometimes it doesn't. As you can see, the example here never got corrected until today. So we'll monitor this here because this just bring another topic of conversation, which is the poor highs and the poor lows. I talk about the poor lows here. Now it gives me the opportunity to talk about poor highs, which is right here. So a rejection here, what do you think it's going to target? Well, it would try to get to the halfback. So basically, let's get back into the half of the range and figure out, who's going to get aggressive from there. Are the buyers going to respond? Are the sellers going to respond? Who is going to take the initiative to participate? Whether it is we take it to the midpoint, whether it is continuation to the downside, or whether buyers are going to step up and say, okay, this is the half back. Let's try to get active here because otherwise it's going to target the opening price. It's 11 o'clock. We've been at it for an hour and a half. I can probably wait until this period ends so I can end the training portion and move on to Discord and do our live streaming there, and we can probably chat there. I mean, maybe somebody has questions and want to open up the microphone, and I like people when you want to talk. It's fine. I can talk, and we can we can basically chat it out, and you know, and I can explain the concepts a little better or elaborate on it a little more. So we just traded 63. Now, guys, what do you think I did here at 63? Anybody? So why the poor high? Because it doesn't have any excess. You need to have an excess of at least two ticks above, um, or take it out by two ticks. So that's why it's a poor high. And it's an emotional level because what happened is 63, like I said before, is the all balance zone high. So emotional because sellers don't want price to get into that zone because getting into that zone then it's going to bring in higher targets into the picture. So you're looking for X's basically. That's what you're looking for to determine whether we have a poor high or a poor low. And two ticks is a standard. You want minimum two ticks, preferably a little bit more than two ticks. So can anybody imagine what did I do at 63? Don't be shy. I shorted it. Yeah, I did. I shorted it for sure. Now we're getting to the POC. See what I was saying? For a rejection here, he would target the POC. A rejection of POC. Now sellers would like to break the one-time framing and bring price back to the halfback. And I'll make this a little bigger here so you can see. See the reaction of POC? Now let's switch to footprint in 5 minutes and see what's happening. This is the opening range low in 30 minutes. See the sellers? Are you see? This is why I use the footprint. I use the 5 minutes and I use the 30 minutes. We have a naked POC here at 52. So we are a pivot. Don't buy it when it's coming down like this. You want to wait until this candle closes to make a decision. So I just closed my position at pivot and I took it with the NQ. So the ES dropped 29 ticks. The NQ dropped, or I took about 10 points equivalent on the ES. See the reaction to pivot is really important. Let's go back and see why it reacted there. Half back, which is the same as pivot. I told you a rejection here. This couldn't be any better, guys, because I told you a rejection here would target POC. If POC fails, half back. Look what it bounced, a half back. Now, one time framing up has ended. So what happens now? Well, now we create a balance zone because we get intraday balance too. And here's the balance zone that has created, assuming we don't make a newer low. Assuming we don't make a new low, this is your balance. Now you measure the balance, and this is your 50% right here. This is the important price now. Below 56, below 57, no good. So this is right here is your 50% of this C and D period. Now, when you combine this together, I have a split, but if I undo the split, this is what you get. Pull high. See it right there? If I do the split, you can still see it. So these are 30-minute candles. We bring the candles back again. Here are 30-minute candles. You see it? 30-minute candles. That's all it is, 30-minute candles. Now, I told you this is the important level right now. It's 58. If it gets above 58, likely to continue up. So now this is a resistance right now. Minimize it a little bit, make it a little smaller. I only done one trade, actually two trades. The long short in the NQ and the long from the bottom zone. So now we got about 18 minutes before we close the period, and we'll see what kind of information the market has provide uh, once the period closes. Now, I have to bring this back into perspective here. So we talked about initial balance. So initial balance high right here, initial balance low right here. So now if the ES breaks above the B here, that is a great recovery because it's trying to build above the initial balance. Now, if you're looking at the 30 minute opening range, which is what I trade, for me, it is above the A period. So for me, this is support right here. 57 and a half is support, which which is great because it has confluence with this. Slow grind, guys. Slow grind. But you can tell, I mean, I'm not worried about it. I only took that trade because I saw an opportunity to do it. Um, saw an opportunity while I was watching the market. All right, let's go back over here and let's monitor this. So I guess we can get rid of the overnight uh singles, so we can start cleaning up our chart a little bit. The ES once higher. See if any questions or anything I need to attend to. Yeah, yeah, that was a great risk reward trade if you will. All right, we'll keep watching here. Again, I will end this session at 11:30, and we'll go to Discord. So one time framing down will only start if we trade below the D period. If we trade below here, then it starts one time framing down. So the NQ got to VWAP and uh, it kind of recovered from there. What is recovering? See what happens here. So as you can see, let's go back to 5 minutes and see what happened. See, try to recover a little bit here. Great bounce from pivot. You know, if you ask me, it's a great bounce from 54 to 60. That's about 6 points. Um, Not a bad bounce at all. And you have 1 point of drawdown. Like I said, it's not how you want to buy when the candle's coming down like so hot. It's not when you want to pull the trigger. You want to wait until you get a bounce. And this is why I like using the Renko chart because you see when it got here to 54, I didn't actually get there in Renko. Oh, it did. It cut it. You know what? This doesn't illustrate things properly. That's weird. Let me reload the data for this chart. See what happened. Okay, there it is. So, you want to buy on a green candle if you want to buy, be a buyer. That's why I like Renko. And this platform is great, guys. I mean, that's why I love it because look how fast things are in here in comparison to other ones. So, anyways, we'll see what happens here. The POC, which we call this N30, which is a naked POC in 30 minutes, uh, is right here where the session POC is at 57 and a half. I didn't even know the session POC was 57 and a half when I was looking at this level here, and I told you that this level is the important level. I was not even paying attention to it. Uh, well, it's kind of is here, 57 and a half. You can see it, but it's really tiny. Now I'm gonna compress this profile again, and you can see it a little better. By the end of the session, this profile is gonna be like this. We'll see how the D period is. D traded all the way down here. Um, so if D was to be broken, then one time framing down would start. It's worth talking about the previous day value area low. So we gap down in price, we gap down on the value area too. That's why the market is weak. It shows some signs of weakness uh, early in the session, I guess. Now it's coming back to pivot again. Um, let it play out and see what happens. See, it kind of touched it. I don't know if it touched it to the tick. Um, Not to the tick. If you look at the pivot area too, you have to go back to April the 13th to understand pivot. April 13th is right around here. You can see April 13th. This is a single print zone at RTH. And this was a monster day to the upside. Monster. You can see it from here. Here, how many distributions, how many singles. And the reasons why I selected this single is because this zone here is really important. And I think a given, if this zone was to give up, then it would bring this singles into play, which are the same singles that I have highlighted in my trading view chart as a single zone that has not been filled yet. So that's why you have to look at the last time the price was in the area to understand what can potentially happen. So 8 minutes until the next bar, next 30-minute candle. and you can see the bounce. You can see the bounce now. Well, for now, it's bouncing. It's funny. My Ninja Trader chart is Ninja Trader is doing great. So thank you, Steve, for helping me out. So it's doing really good. Uh, a lot of the bugs and issues have gone away. Um, I actually went back and reloaded my old workspace because I needed to see some things that I wasn't able to see otherwise. So, but I'm happy with it. Thank you, Steve. All right, so we'll keep working here. We'll see what else we got. Again, no reason to get into a long position right now, unless you get some sort of confirmation. And the best time to enter a trade is the opening of a new period because you can work with the candle POC in 30 minutes and be able to get a point of entry and a stop. So that's just the way that I look at it. Um, um, we'll take it from here and see what it does. So we wait 6 more minutes and I'll stop. Like I said, I'll stop the recording and just go to I don't want to do a platform specific tutorial or anything like that. But if you guys ever have this platform, I'll be more than happy to share my templates. So all you have to do is load it and you have the same thing that I have. I know there's a lot of other things that I want to cover, but obviously this is just a time dedicated to um, the market profile. And the beautiful thing is that we can build on this as we do our daily plans and weekly plans. We can build a better foundation um, and understand concepts a little better. If you trade NQ, 125 was a short entry just now, like a candle ago. Only issue we're above BWAP. But yeah, at some points we gotta be above BWAP, I guess. So if we start a rotation, this gets really tricky. So the I guess Tesla is dropping today. I had a put on Tesla, so I'm more than happy with my results. We got to pivot again. We got 3 minutes until the next um, candle open, and this is when it gets interesting, guys. Like really, really, really good example here. So you can see the 5 minutes is one time framing down, right? Got to pivot, but it's still one time framing down in 5 minutes. Okay, not 30 minutes, 5 minutes. This is a POC here that's naked, 52. 30-minute POC. Why do I have that POC there? This is that's funny. I don't see it in 30 minutes. All right. Well, we'll let the glitches work itself out, but let's continue to monitor this because I want to show you the next candle open. Next candle open is going to determine what do we do. And we have about 1 minute and 50 seconds before the candle opens. It's either going to start the one time framing or it's either going to recover from here and um, maybe resume the trend. I don't know, but all I can do is to use the information generated by the market to make educated decisions. As I'm looking at the chart here, uh, NQ came to the VWAP and it bounced from there. So we'll see what comes up once the new TPO opens. So it broke the one time framing up. This candle did not make a new high. We have unfinished auction here on the top. Uh, so now this becomes uh, we'll see what it does when the new candle opens. You still want to keep an eye on 63. I don't know if it's gonna get up there. Again, nobody knows. You got to play with the information. And 60 is the value area high. 57 is POC. So it's bouncing from there. And I know I transitioned to footprint, guys. I know but we're watching the next period, and this is very important because here is when you match this with the footprint and you make decisions based on what you see. Because in here you can't see orders in here, you cannot see any orders. But if I bring the profiles and I'm gonna select today profile for Delta. This is just a Delta profile. This is the biggest level, 58, 58.75. The red is selling, and uh, I guess the pink is sorry. The red is buying, the pink is selling. All right, so the period just opened. Let's transition to the footprint. See where it opened right here. It touched that POC, and look where it's at. This right here is the opening range high in my terms. The 30-minute opening range. Okay, so low risk trade, obviously it's above pivot. Low risk trade is to get an entry uh, from here and use pivot as your stop. If you were to go long, that's what it looks like. If you were to go short and you want to short the opening range, then your stop is the high of that candle right there. Now you have to make a decision, which way you want to go. Obviously, pivot is here. Uh, you don't want to short from a poor spot. You don't want to long from a poor spot. That's the name of the game, is looking for the spots. Where are you going to initiate the trade from? And you go to the TPO and you monitor what the market's doing. So let me just split this again. If it trades below this price here, it's not good. What did I tell you that was the most important price? As we established the little balance zone, 58 and a half was the most important price because it created a balance zone. And it just happened that that was the price that was important here. So as you can see, we're trading below it. Now we're trading below pivot. And if it starts one time framing down, then things will get really tricky. Now let's gauge the 5 minute. Look at the 5 minutes. You gauge the speed here. It's how you gauge the speed. Some people want to know how do you manage a position. Well, use the 5 minute chart to manage your position and move your stop in relationship to the 5 minute high if you're short, or 5 minute low if you're long. I favor a retest of the opening price. That's just my opinion. It doesn't matter what I think. But we're right here at pivot and see if the buyers defend that. This can also be a low risk long because you buy pivot and you put your stop right here at 52 and a quarter. But look at the aggression on that. I mean, you got to determine which way you want to go, guys. You know, and you have to use the market generated information to help you with that stuff. I told you 50, 58 and a half was the area that created that balance after the one time framing up was broken. So that is the halfback. So NQ bounced from VWAP two times. Uh, Not sure if it's going to do it the third time, but we're not in the guessing game. We use the market information to make decisions. Your immediate target here is 50 if it breaks. Why 50? Value area low from today's session. Let's go back to TPO right here, 49.75. See how buyers are defending the one time framing? Strong sellers will want to break the one time framing. Stronger sellers will not miss this opportunity. And that's how you gauge the strength because when it gets to key areas, if you don't see continuation, uh, then the other side is being weak because you have to use the momentum to build uh, interest. And see how he just touched that naked 30. I don't know if I have it. Maybe Stu can verify if his platform has one, but just touch that naked 30 there. I don't know if that's a valid naked 30, but like I said, that's a possibility of a low risk long there. Why was it a low risk long? Well, you can gauge here the low 53, low 52 and a quarter. So it did break the one time framing. So you see in the response from the buyers because the sellers got trapped over here. So let's go back into the TPO and take a look and see what happens. You see, sellers, buyers understand that this is very important, not breaking the one-time framing, and we did break it. So I don't want to hide the fact that three ticks of excess. Uh, so it's technically broken. It's just that we are above pivot right now. Don't let one tick be in the defining factor, for the rest of your day. Don't get married to a single concept either. All right, let me see if I got anything else to discuss. Five, like I said before, 5 minutes, 30 minutes, and this is my go-to chart. 5 minutes and 30 minutes. See what happens here. Go to back to 5 minutes, and you can see clearly what's happening. It has not broken the one-time framing in 5 minutes, so you got to monitor that. What you want to see for buyers, to gauge the buyer's response, you'd like to see that they make a new high here in 5 minutes. That's how you gauge the aggression. Forget about the numbers here. The only important thing for me here is the POCs. I don't care about the numbers. A lot of people do. The people that trade exclusively footprint, they do. I just want to see what the POCs are. That's the point of control. It's the most important thing as we just discussed this morning. So that's how I gauge my stuff. All right, let's switch back to TPO. Now this is the POC here, 56. So we want to see acceptance above 56, acceptance above um it says the ES has a bullish dot. Let me verify that. It's unconfirmed, but it's a bullish dot. So we'll see what happens with a bullish dot. I mean, I like what I'm seeing, recognizing that you don't want to give up too much on the one time framing. And sometimes one tick traps sellers because they think they're going for continuation to the downside and they get trapped. So they're forced to close their position. And what happens is that pushes price a little higher. As I explained here in this chart here, you can see how sellers got trapped right here. If you switch over to 30 minutes, this is how all the reversals starts. It all starts this way with somebody getting trapped. You can see it right here. Now, did anybody buy pivot? It's okay if you didn't. I can assure you that I did. My entry was 54 and a half at the opening of this 5 minute candle right here. Why? Because this touched that POC there. I have to verify, but I was not going to challenge that. Uh, touch that naked 30 right there live. I don't know again if it's in your platform is correct or not. I'm not going to debate that. I'm not going to be upset with it because it just helped me to win a trade. Because I'm not losing this trade. I'm already at break even. And I take 3 points for my first target, and I just ride the rest. Whatever happens, it happens. It's risk free right now, and I wasn't supposed to even be trading. But I see the setup. Now the same thing you do here. So now this one was one time framing down. This one broke the one time framing down. And you do the same thing that we did in 30 minutes, assuming that's the high. You look for the 50%. This is the point you want to watch here. Look for the 50%, and you want to watch 55, the POC of that candle. You don't want it any lower than that, assuming that's the high. So we'll monitor this. This is great, man. What you're seeing to what you saw yesterday is incredible, and what you're seeing today is just amazing. I don't know if you look at. I'm not even looking at. I'm not getting frustrated because I'm not even looking at the range today. I get frustrated when I look at the range. I'm looking at just movement, response from key areas. 63 respond, 54 respond, half of the gap right here respond, gap fill respond. I'm looking for those responses, and that's how I gauge my. That's why I want to see my skill set developing. You know what I mean? Like being able to see that and also trade that. So now I want to split this, and we can see the profile here clearly. So this started one time framing now. So if the E breaks above the D, then things get a little tricky in this area here. So we'll see what happens. I want to hold on to this a little longer because I'm about to get out of my trade any second. Um, and we'll see what the outcome of those trades were. ES whole moving average bearish. Okay, keep an eye on that. So we'll see what happens. So if you measure the range of the ES right now, it's about 73 ticks. Just call it 80 ticks. That's 20 points, right? About 20 points. A little less than 20. So you're gonna go for those singles now. You'll have to fix the poor high. And another thing, sometimes the market will do this, give you clues that it wants to come back to fix that. It just needs more energy. So it gives you clues that that's what the intentions are to fix that poor high. But it's coming down to key areas to gauge the interest from the buyers and the sellers, market participants. So look at this. Look at this whole entire candle. Are you seeing this? This was here, 4,300. Now this one has a positive delta, and it's just price continues to climb up, and it's right above the prior POC, session POC, and it's likely to fix this and tag the 66. We were talking about 60, 64.75 as the range, 66.99, I'm sorry, 67, let's just say 67 as a range extension, which is the 50% range. It will have to fix this to get to that 67 right there. So that's how we're going to gauge this and see what can potentially happen if it gets to that level. Once you look at footprint, this is all sellers right here, the 61 sellers. There's unfinished auctions on the top over here, so meaning there was buyers that didn't get their orders filled. Or it could be sellers, I don't know. But it's unfinished auctions up there. So let's gauge the interest once we get back above this area or that area. I say 67 would trade as the 50% extension of the opening range. That's what I'm leaning. Is it going to trade right away? Probably not. I just closed my trade because this is where sellers came out before. So I closed my NQ trade, and while I was doing this class, I just capture my I just capture my I don't know if I can paste this. Well, you can see it on my screen right there, the equivalent of 20 points on the ES. So I am going to wrap this up. Um, Thank you so much for your attention. I hope you learned something. We're gonna go to Discord. I'm gonna open up the mic, and if you guys have any questions, we can go at it and talk it through. I will stop the recording now, and then we'll catch you guys later. All right. Bye bye.